Today we'll talk about why experts remain skeptical about the NFT market. Don't forget to like and subscribe. Let's head into it. Digital currencies like Bitcoin are becoming more and more popular as we enter an even more digitalized society, with many holding that cryptocurrencies will eventually replace traditional paper notes. Yet while Bitcoin is the flagship crypto, another increasingly prevalent commodity is NFT, or non-fungible token, which is almost like a digital version of a collectible. What is an NFT? The non-fungible part of NFT means that it's completely unique and cannot be directly replaced with something else. Unlike in currency, where exchanging one note of equal value for another will leave you with the same amount, an NFT has its own unique value, which is subjective. This could be, for example, a historic painting or a vintage baseball card. No matter how many copies exist, there will only be ever one original version. NFTs are assets that exist in the digital world with no physical version, and digital tokens serve as a certificate of ownership for these assets. Records of who owns what NFT is stored on the blockchain, supported and kept safe by the ledger. The NFT market. While it's maintained by some experts that NFTs are just another craze, which will lead to a bubble that will inevitably burst, the investments in this market suggest the contrary. With over $10 billion traded in the third quarter of 2021 alone, there are several NFT marketplaces which allow online users to buy and sell such tokens. Collectors can either gain or lose everything. The NFT Frenzy continues after picking up momentum earlier this year. Although the sector is still in its initial stages, data from Non-Fungible, a site that tracks NFT sales data, shows that digital collectibles have recorded the sales volume of over $6.2 billion since 2017. On the other hand, digital art has garnered over $1.9 billion. Explaining why the NFT space mainly comprises collectibles and artworks, John McCormack, a computer science professor at Australia-based Monash University, said they naturally fit into the sector. McCormack further noted that there can only be one copy of a specific piece of art. However, digital art is easily copyable. As such, NFTs introduce an extra certificate of authenticity to prevent counterfeiting. While the space has numerous success stories, experts are still not convinced that collecting NFTs is a good investment. Their main concern is that it may not be the best time for people to enter the market. According to researchers, the NFT market has expanded too quickly due to massive hype and speculation. Data from DappRadar backs these claims, seeing as NFT trading volume swelled by 38,000% year to year to reach $10.7 billion in Q3 of 2021. Why experts remain critical. Non-fungible tokens, unique digital assets like artwork and sports trading cards that are verified and stored using blockchain technology, exploded in popularity in 2021. People create, collect, and trade NFTs for millions of dollars, some with the hopes to profit in the future. But experts are still skeptical that NFTs are a good investment. The surge in NFTs is still fairly new, but massive amounts of money has already exchanged hands among collectors. Since 2017, for example, NFT collectibles have generated over $6.2 billion in sales, while digital art has generated over $1.9 billion, according to Non-Fungible, which tracks historical sales data of NFTs. I think things like artworks and collectibles have become the big commodity of NFTs because they naturally fit into what NFTs are, according to John McCormack. Digital being copyable, having this extra certificate of authenticity is really important to show ownership of this particular thing. Researchers are concerned that it may be a bad time to enter the market, which has grown too big, too fast, under immense hype and speculation. NFT trading volume grew 38,000% year over year to hit $10.7 billion during the third quarter, according to an analysis by DappRadar. This may well be the apotheosis, the peak in the paradigm of everything bubbles, said Michael Every, Rabobank's head of financial markets research for Asia Pacific. It worries me intensely, even if I fully understand the dynamic that drives younger people in particular. Experts suggest buying an NFT because you want to own it, not because you want to get in on the hype. Don't buy it because it's an NFT, said Evan Cohen, co-founder of Vincent. Buy it because you like the art, or buy it because you think the collectible is cool or the community is cool. You want to participate for the asset, not the underlying technology that powers this. Volatility is a big issue. Experts also pointed to volatility as an issue that makes them skeptical of whether NFTs are ideal investments. Volatility in NFTs stems from the fact that pricing of most NFTs is in cryptocurrencies, which are prone to wild price swings. Explaining why he believes NFTs are not an ideal investment, he posed the question of who would want their pension tied up to an asset worth $1,000 on Monday, $1 million on Tuesday, and $1,000 again on Wednesday. According to him, retiring on such presumed income flow would be challenging because investors can gain everything or lose everything quickly. What do you think about experts' opinions? Are they accurate of the real situation? Let us know in the comment section. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.